Welcome back to Teshkid FX for another price prediction update, and in this video I'll be giving you a price prediction update on Polygon Matic, whose current price stands at the $0.806 mark, and here on TradingView the market is up by 1.28%. and in this video I want to give you the short-term and the long-term scenarios that I'm expecting to play out, basing my analysis on the Elliot structures and the Fibonacci's, and allow me to kickstart the video here in the daily chart by giving you a brief of what has been happening on this chart. Polygon Matic, from these top prices that we had been trading within, we saw a very nice bounce to the upside, making it to an all-time high at around the $2.9 mark in a movement that I'm terming as a higher Elliott wave count 1 to the upside. And after seeing the all-time high, we had been seeing our prices in this massive ABC corrective structure, taking us back to around the $0.32 mark in a movement that I've been terming as a higher Elliott wave count 2. And after seeing the formation of a higher Elliott wave count 2, whatever we expect next is an impulsive movement to the upside in the formation of that higher Elliott wave count 3 before we see a wave 4, and then continue pushing even higher in the formation of that wave 5. And getting a little bit into the details of the formation of this Elliott wave structure right here, in the formation of a third wave, which is an impulsive wave, we also expect to see fractal waves in formation within that wave 3 to the upside, and I can also sketch out a minimum target area to the upside in the formation of that wave 3 using the Fibonacci's, connecting them from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave, and that gives me a minimum target area to the upside in the formation of this wave 3 at the fib level 1.618, which perfectly lies at around the $4.98 mark, and that is the minimum that I will expect that wave 3 to the upside to do before we see a wave 4, and then continue pushing higher in the formation of that wave 5. And jumping to the 1 hour chart for further analysis, here on the 4 hour chart you can see I have this Elliott wave structure in blue, which is right here, which is a fractal wave within that higher Elliott wave count 3 that I have shown you on the daily chart, where I believe we have completed the formation of that first wave to the upside. And because a first wave is also an impulsive wave, we also expected to see fractal waves in formation within that first wave, and have represented that impulsive nature within the first wave in this Elliott wave structure in yellow, having the wave 5 completing that higher Elliott wave count 1 to the upside. And whatever we expect next after seeing the formation of this wave 1 is a bit of a retracement to the lower side in the formation of a second wave, which is a corrective wave, and because of its corrective nature we also expect to see an ABC corrective structure in formation within that second wave. And there are two ways I can have that ABC corrective structure in formation within this second wave right here. And before I get to the ABC corrective structure that we can have on this chart, here on the 4 hour chart we have been trading within a channel which is right here, and we have managed to break out of the channel to the lower side, and that also happened after losing the 20-day MA, which was acting as support. And once we managed to break out of the channel to the lower side, we continued pushing lower, got back to the key area of support at around the $0.78 mark, and it seems like we have found support, because you can see here on the 4 hour chart we have started to print some bullish candlestick. That means we have found support and we are seeing a bit of a recovery to the upside. And getting back to the ABC corrective structure that we can have on this chart, there are two ways we can have that ABC corrective structure, and that is what is going to give me my short-term scenarios that I'm expecting to play out. And the very first way we can have that ABC corrective structure is having this as a massive wave A. Then I'm expecting a bit of a bounce to the upside in the formation of that wave B, before we see another impulsive movement to the lower side in the formation of that wave C to fully maximize the formation of that second wave, and sketching out a minimum target area to the upside in the formation of this wave B using the Fibonacci's, connecting them from the high of that wave A to the low of that wave A. That gives me a minimum retracement area to the upside in the formation of this wave B between the fib level 0.382 and the fib level 0.618, and I can mark that target area here on the charts, which perfectly lies between the $0.96 mark and the $1.09 mark, and that is the minimum that I'm expecting that wave B to the upside to do. And for that to happen, I expected a breakout out of the channel to the upside, also managed to break above the key area of resistance at around the $0.95 mark, maybe even see a retest of that key area of resistance, continue pushing even higher to fully maximize the formation of that wave B within this red target area over here. But it seems like we are not going to have that movement to the upside in the formation of that wave B to fully maximize that red target area right here, because you can see we have seen a breakout out of the channel to the lower side and we have continued pushing in even lower. And there are key areas on the Fibonacci's that I expected us not to lose for us to still say that we're in the formation of this wave B to the upside, and if I use the Fibonacci's connecting them from that low down there to the high at around the $0.94 mark, that target area was between the fib level 0.382 and the fib level 0.618, and I can mark that target area, which perfectly lies between the $0.88 mark and the $0.83 mark. Losing that target area here on the Fibonacci, that would mean a different ABC corrective count on this chart, and you can see we have lost that target area and continued pushing even lower back to the area at around the $0.78 mark, and that means this is not a valid ABC corrective structure, and it's not the most likely one, and I have a different wave count to support to give me another short-term scenario. And the other way we can have that ABC corrective structure is having this as a wave A. Then we saw a wave B making a peak at around the $1.17 mark, and as we have continued pushing lower over here, this is the formation of that wave C, which is a straight sell-off to the lower side. And once we lose the key area of support at around the $0.78 mark, then that might be the move to fully maximize the formation of that wave C. Once we see a retest, which is a success, continue pushing even lower, losing other key areas of support, and also sketching out a minimum target area to the lower side in the formation of this wave C using a trend-based Fibonacci, connecting it from the high of that wave A to the low of the wave A, then dragging the fibs to the high of that wave B. That gives me a minimum target area to the lower side in the formation of that wave C back to the fib level 1.618, and that is at around the $0.3091 mark, and that is the minimum that I would expect that wave C to the lower side to do to fully maximize the formation of that second wave. So let's be patient and see how that plays out. Also taking a look at the indicators to see what movements will be supported here on the RSI. On the RSI we are trading at around the 25 mark, meaning we have massive room for us to support any movements to the lower side, and also any movements to the lower side for now it cannot be supported before because we have managed to get into the oversold region. Also taking a look at the MACD, here on the MACD we have printed a bearish cross, and that would mean no prices are coming our way. So let's be patient and see how that plays out, and I'll keep you updated.